Hello guys, I hope you are well. In the previous video, I explained how to open a buy position and a sell position. And in this video, we are going to talk about candles and the concept of the market movement as planned in the last slide of the previous video. If you like this series of video, please subscribe to my YouTube channel and turn on the notification to be notified whenever a new video is uploaded. If you have an opinion or a question about trading, you can ask directly through the comments or my Instagram page, which I have posted here. Well, let's start the new topics. If we want to have a look at the structure of the market, before that we have to look at its components, the candlesticks. Candlesticks show the rate of increase and decrease of each item in the chart in a certain period of time, which can be from 1. But to analyze the chart, we look at it based on 1 day and 1 hour candles. Here is an example for an hour candle. Suppose the price of a share opened at 50 at the beginning of 3 p.m. and during 1 hour, the price goes below $50, for example, $45, and after that to above 50, for example, $60, and after that, at the beginning of 4 o'clock, when the candle should end, it will be closed at the price of $55. And on the right side, you can see the opposite. A candle whose closing price is higher than opening price is called a bullish candle. And on the contrary, if the closing price is lower than the opening price of the candle at a certain time, like this example, it is called a bearish candle. Now here we have a candlestick which we call a candle body. And we have 2 shadows which recorded the lower shadow of the lowest price during 1 hour, and the upper shadow recorded the highest price during this 1 hour. And finally, the candle at the price of $55 is closed, that our body of candle is formed. Now you can consider that these candles can be made in a second or in an hour or a day or a month. Now let's talk about the time frames in the chart. We deal with many time frames. Because we use the BAX strategy, we should work with hourly and daily time frames. That is, if we choose the hourly time frame, the chart will show us the hourly candles. And if we choose daily time frames, the chart will show us the daily candles. And you should also consider that each daily candle in Forex consists of 24 hourly candles. But in the stock market, each daily candle represents 8 hourly candles. Because the stock market is only open for 8 hours during the day and trades takes place within it. However, Forex, cryptocurrency and commodities are active 24 hours a day and we can trade in it. Now that you understand the subject of time frames and candles, let's talk about the concept of the market. If we want to talk about the technical issue, we should know that there are many methods in the trading and technical world, but many of the methods are generally obsolete and are no longer applicable in the market. In addition, so that you can make more trades and the broker receive a commission from each of your trades. Brokers thought out creating methods that you can rely on to increase the number of your trades. Some examples of this trap are mentioned here. Is the first price action method, which was used by American traders of the market analysis 100 years ago, and it is no longer effective in the market and it is obsolete, and the market leaders no longer look at this method. The second method, which is a very wrong method, is the use of indicators that were created by brokers so that you can rely on them to have higher confidence so that you can do more trades and pay more money for commission to the broker. The third method is to use oscillators, which were made by brokers similar to indicators. The fourth tool is Fibonacci method. It's very old and outdated like price action. If you are interested in more information about these methods, you can comment so that I can explain them briefly. There is a series of other methods called harmonic pattern that you can see in the pictures. Unfortunately, many traders use them to trade, such as a head and shoulders pattern or classic patterns such as increasing angle or decreasing angle or increasing or decreasing triangle. This method may be useful, but you should know that if you are going to enter a trade relying on this harmonic pattern, you have entered very late. For example, in this picture of the left, we have the head and shoulders pattern. According to this method, we should enter the trade under the right shoulder when the price of the previous low price breaks and return to the previous level like this. And the target is equal to the low price till high price, like this one. This is if I teach you the bank strategy method to enter at the highest possible level, which is the part at the top of the pattern, like head, and get most profit from the market. I ask you not to go towards these old and harmful methods because I myself have tried all of them and they have had no results but harm for me. Now let's talk about the trading method of the banks, which according to the explanation I gave in the last video, we have to look only at the hands of the banks to trade and ride the wave that the banks have started. Let me explain the beginning of the topics with an example. Suppose we are going to invest in Tesla stock. In the first step, the share price is $100. The price moves up by banks and big companies through buying pressure and increase the volume of purchases. And after that, the price has now reached $200. Well, if you remember, in the first training video, I explained who is with us in the forex market. The first seat belonged to banks and the second seat belonged to hedge funds. Here I'm gonna explain to you about the role of this group, hedge funds. In the previous video, I said that hedge funds don't have their own money and operate in the forex market with banks' money. This means that everything they do in the market is for the benefit of the bank, and the bank will benefit from that move. If the bank is going to make a long-term profit by buying or selling a share during the process of increasing or decreasing, it doesn't place all its orders and looks at the reception of the large economic companies to buy or sell the desired share, because there are large economic companies that intensify the trend of the chart. Let's assume that the bank's final price for Tesla will be $500. Now, in order not to lose in this process and to encourage others to buy this share, the price in the market should be attractive to everyone. This is done by a group called hedge funds. It means that the bank provides a capital to hedge funds that move against the direction of the market. Of course, moving against the direction of the market has several other factors that we will discuss later. Well, let's go back to the slide. Currently, Tesla's share price has reached 200. Here, banks save profit and withdraw part of their profit from the market, which is called partial exit. This partial exit caused selling pressure in the market and the market moves down. Besides, hedge funds drive down the price for buying and reinvesting banks. Now the banks decided to buy Tesla shares again at the price of $140. And this time the price is going up from previous high price and forms a new high. Our new high is currently $300. I want you to pay attention to this point carefully. When we see such a structure in the chart, we realize that banks are investing in this share for the long term. If we have it in a daily time frame, the period of investing and price growth will certainly be longer. And if we have it in an hourly time frame, the price growth period will be shorter. Now we have to wait for the hedge funds to correct the price again. So that we can enter the buying position at the right time and buy Tesla shares. When the price reaches the appropriate area, we can buy the share and accompany the price to at least its previous price limit and earn profit. If we miss this opportunity, there is no need to worry and we can repeat the same structure again at the right price after correcting the price and re-enter the position. In this presentation, we discussed the concept of market movement and understood that every movement in the market has a reason behind it. In the next video, we will discuss the different movements that a stock or currency pair that have and how we can find out when is the best time to enter a trade. Okay, I hope you will like this video. To support me, please subscribe to this channel and share with your friends. Thank you very much for watching this video. Bye until the next video.